Welcome to the weekly trading signals. First, I'd like to start the session by giving you some information about me. My name is Ehab Jubeir. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robot signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. There will be a number of tradable economic news that we will be looking at this week. Wednesday, 30th of March at 1:15 p.m. London time, US ADP non-farm payroll employment. 31st at 1:30 p.m. Canada GDP. 1st of April at 9:30 UK manufacturing PMI. At 1:30 p.m. US non-farm payroll. And at 3 p.m. US ISM manufacturing PMI. We will talk in more details about these events. We will start with first events. We'll be looking at this week US ADP non-farm employment change that will be released on 30th of March. US ADP non-farm payroll employment change is usually a high impact release to trade. And in this week's case, since it is the only news release we can use to measure Friday's non-farm payroll, I believe market will surely react if we get a strong deviation. It's forecasted at 194,000. Previous release was 214,000. If the deviation of 50,000 is hit, the market probably will change perception for the non-farm payroll release. So we will be looking for a deviation of 50,000. If we get 244,000 or better release, I would be looking to make rise option on the US dollar against the weakest currency at this moment. If we get 144,000 or worse, then I would be looking to make full option on the US dollar against the strongest currency. We will use the retracement trading method to trade this release, and they will use it in most of the events that we will trade. We will wait for the deviation, wait for the market to move with momentum first, and wait for a decent retracement before entering the market and buying the option or placing our trade. There is something important I want to mention, and I want you always to remember before trading the news. Always remember to draw support and resistance levels. Draw lines of support and resistance before the news release. If the market breaks through these levels, this means you have a better opportunity at winning the trade. So after the news release, watch your lines. If the market breaks these lines, there is a better opportunity at winning the trade. If we don't get the deviation number, so if we get in between release between 144,000 and 244,000, in between numbers means you should just follow the pre-release market condition and sentiment. So we can build scenarios for the chart we have here, dollar yen, 30-minute chart. We draw resistance, this green line, and support line, this blue one. So the market, we can see it runs in channel. So if the release, the time for the news release is like now, and we will watch if the market will break these lines. If it breaks it upwards, so it will be rise option. If it breaks the support line, the blue line, so it will be full option. I will recommend you to make full option. But if you can see, the market respects the resistance and support line, so keep the trend of the market. In this situation, it's upward trend. So to make it easier, if we get 244,000 as actual release or more, we will make rise option on the dollar without looking at the trend of the market at this moment. If we find 144 as actual release, we will make full option after market retracement definitely. But if we get in between release, we will follow the upward trend. So like in this situation, in this case, in this scenario, we can see in the chart, we will make just rise option. We'll make rise option at the dollar yen. Second news that we'll be watching this week is Canadian GDP that will be released on March 31st. Canadian GDP or gross domestic product is expected to come in at 0.3%, the forecasted number, and considering the recent rise in crude prices and the constant news on production freezes, I would not go against the Canadian dollar for any longer term trade. It's forecasted at 0.3%. Previous release was 0.2%. How to trade this news? We will look to make full option if we get a 0% or worse release, or we will make rise option on the Canadian dollar if we get 0.6% or better release. Remember that with recent strength in the Canadian dollar, a strong fundamental such as the Canadian GDP, this news release figure, may be the catalyst we need to see more volatility in the Canadian dollar. As usual, we will be trading this release using our after news retracement trade method. And always remember to draw the support and resistance levels, draw the lines for support and resistance before the news release. If the market breaks through these levels, this means you have a better opportunity at winning the trade. If the market breaks these levels, definitely at the news time after the release. So we will make rise option at 0.6% or more or higher, and full option on the Canadian dollar at 0% or less. If we don't get the deviation number, if we get in between number between 0 and 0.6%, I expect the market to follow the pre-release market condition and sentiment. So in all news, what you need to prepare to, just before the time of the news release, to draw resistance and support lines, and to see clearly the trend of the market just before the news release. And according to the time frame used, you will make the duration or expiration of your option. If it's short term, you will make the duration of your option within few hours. If it's with higher time frame from 4 hours or higher, you will make definitely the expiration of your option within days or the end of the week. UK manufacturing PMI will be released on 1st of April. UK manufacturing PMI should be a strong market mover, but since it will be released on the same day with the US non-farm payroll report, it will be released in the morning, I would get in and out of the market before the non-farm payroll release at 12:30 GMT. It's forecasted at 51.3. Previous release was 50.8. How to trade this news? We are looking for a tradable deviation. The definition of deviation or tradable deviation is the difference between the forecast figure and the actual release number. The difference between the actual release and forecasted number. This is what's called tradable deviation. We will look for 2 from the forecasted number to trade this news. And because this is a leading indicator, UK manufacturing PMI, and its impact may hint a future trend of other economic indicators like inventory, employment, and retail sales, the market usually reacts to this release with volatility. It's one of the news you should not miss to trade. We will be looking to make a rise option on the pound at 53.3 or more or higher or better, or looking to make full option at 49.3 or less. As usual, we will use the tracement trading method to trade this release. And don't forget to draw the support and the resistance levels before the news release. If we get in between number, we don't get the deviation number. So if we get number between 49.3 and 53.3, I expect the market to follow the pre-release trend. US non-farm payroll employment will be released on April 1st, next Friday. US non-farm payroll expected to be around 208,000, and with the federal already talking about a potential rate hike even in the April meeting, I would expect to see plenty of market reaction if we get a strong release. It's forecasted at 208,000. Previous release was 242,000. How to treat this release? Non-farm payroll employment change release is forecasted at 208,000. The unemployment rate is expected to be at 4.9%. We'll keep both numbers in our mind. If we get a significant lower release on the non-farm payroll, 138,000 or worse, and slightly higher unemployment rate, 4.9 or more, I would be looking to make full option on the dollar against stronger currencies at this moment, because speculation for federals to potentially delay the next rate hike. So unemployment rate at 4.9% or more, and non-farm payroll number at 138,000 or less, I recommend to make full option on the US dollar. On the other hand, if we get a strong non-farm payroll release at 278,000 or better, and the unemployment rate falls or remain at 4.9%, dollar could strengthen, and I would make rise option on the US dollar against other weaker currencies. So these are two scenarios. Last scenarios is if we get a conflicting release, then we will wait and see how the market reacts first. If there is an overwhelming sentiment driving the market, we will get plenty of opportunities for an entry. If we just wait for 10 or 15 minutes after the release. And most probably the market just will follow the pre-news trend. So you should wait if we get conflict numbers, and you will see a clearer view. You will get a better chance to enter the market if you wait. Like most on our news, we will treat it using after news retracement method. And don't forget also to draw support and resistance levels before the news release. I trade this news usually with euro dollar, yen, and Australian dollar. And I prefer also to make the expiration of your option with the end of the day, at least 4 or 5 hours as expiration time, and don't keep it for the next week. US ISM manufacturing PMI will be released the same day, April 1st. It's a leading indicator for the manufacturing sector, but since it will be released after the non-farm payroll, same day, I would consider the actual release of the non-farm payroll before placing the trade. Because what will affect the market more will be the non-farm payroll number more than the ISM manufacturing PMI. It's forecasted at 50.8. Previous release was 49.5. How to trade this news? We will be looking for around 2 points of deviation from the forecasted number. If we get 48.8 or worse number, we could see some dollar weakness. Therefore, we will make full option on the US dollar. If the opposite is true or 52.8 figure is released, expect to see stronger US dollar in the short term. Therefore, we should make rise option on the US dollar. Keep in mind to look for an after news retracement trade as usual for this release. Wait for the release, then the initial market move, and wait for decent retracement before buying the option. If we don't get the deviation number, so if we get the number between 48.8 and 52.8, expect the market to follow the pre-release trend. Remember also to draw the support and resistance levels before the news release. If the market breaks through these levels, this means you have a better opportunity at winning your trade. This was last news we'll look to trade this week. So then I'd like to thank you for attending today's webinar. Goodbye and see you next time.